Can we start? Okay, good morning, everybody. Welcome. Unblocking the blockchain. I think we'll have a fascinating 1 hour. My name is Axel Lehmann. I'm the Chief Operating Officer of UBS, a company that is highly interested, obviously, in the development of blockchain. We just issued yesterday a white paper on it because that, we believe, could have tremendous impact on the financial services industry and beyond. But we have a fascinating panel. Let me introduce to you Jeremy Allaire. He is the founder and CEO of Circle. Then we have Leanne, Kemp, founder and CEO of Everledger from the UK. And we have the finance minister of Luxembourg, Pierre Gramegna. And maybe before we, or as a start of the discussion, maybe I ask you, maybe with you starting, Pierre, just to introduce yourself and say a little bit, you know, what is your relationship with the overall topic of blockchain? In other words, why are we here? Pierre?
Thank you. Thank you very much. First of all, thank you for inviting me. And probably you in the room, as my fellow panelists say, what the hell are we going to do with the Minister of Finance of Luxembourg? Why the hell did they invite this guy? I would have preferred to have another guy who knows a lot about blockchain. And obviously, I'm not going to make a mystery out of that. I'm not a specialist of blockchain. But nevertheless, let me tell you how we were confronted with blockchain as a country. It comes as no surprise to you that obviously the link of Luxembourg with blockchain is due to the fact that we have an important international financial center, and that blockchain will revolutionize banking and financial services as we know it. But if you look at even at the origin of blockchain, the first use that was made of blockchain, as far as I've been told and as far as we have followed it in my country, Luxembourg, was virtual currencies. Now, obviously, when you have 140 banks in your country, when you have a thriving private banking community, and when you have the largest investment fund industry in the world after the United States, and you hear that there are virtual currencies, you obviously get excited and try to understand how it works. So that's how we were confronted with that, I think maybe many years before others. So how do we see that? The way blockchains function is going to make delivering of financial services much faster, much cheaper, with less intermediaries. One aspect where we've seen this already happening a lot is payment services, which is one field where we've been very attractive because we are the hub in Europe for many companies that do payment services. Linked with e-commerce. Having been the hub of e-commerce in Europe for many years, this was like a natural development. So as a government, we decided a couple of years ago to have a digital initiative, which is all-encompassing. But what is maybe most interesting for us here is especially we are following what's happening in the financial world. As a matter of fact, if you want to be attractive for blockchain, you need to have a legal framework in your country that is conducive to business. So we were very innovative a couple of years ago to be among the first ones to legalize electronic signature, for example, which allows also for smart contracts, another interesting application of blockchain technology. And the other thing that you need a regulator who is keen on innovation, which doesn't happen all the time. And I have to always be careful when I say this, but the regulator is there to apply the rules, to apply them fully and in an equal manner. But at the same time, the regulator can be innovative. Very often in Luxembourg, we have to apply EU directives, but then there are options in the directive. And the latest example where the Luxembourg regulator has been innovative was with virtual currencies. In fact, Luxembourg has given out licenses to two virtual currencies, and we were the first ones to do so. And why could we manage to do so in a very interesting way? Nobody knew or knows how to regulate virtual currencies because they come from somewhere else. And nevertheless, we have decided to say virtual currencies have to abide by the same regulations than traditional currencies. Well, it's a very simple move. And when you look at it, how virtual currencies work, at one point in time, in the beginning of the chain, at the end of the chain, there's traditional money involved. So why not have the whole part that is blockchain-based and virtual currency being regulated by the same directive? So that's what we decided in Luxembourg, and that's why we were able to have the two first applications for virtual currency. This being said, we know that, and we're going to have discussions on this, how blockchain is going to change financial services. Let me also raise the issue which I find very important as a member of government, representative of my country. There's at least two issues that need to be looked at very carefully, and that is anti-money laundering, number one, and two, the know your customer issue. Now, know your customer, we have a lot of experience, all of us here, that it is a key issue to know the beneficial owner. We know that in traditional banking. Now, one of the advantages of blockchain is that through the system itself, you know who is having a relationship with you through the blockchain. But to really find out who is behind this entity is, well, there need to be some guarantees there. So that's why I say anti-money laundering and know your customer seem to me two issues that need to be looked at very carefully in the context of blockchain.
Okay, perfect, Pierre. And definitely, I think Luxembourg is one of the most advanced countries when it comes to embracing the blockchain. Leanne?
My name's Leanne. I'm the founder and CEO of Everledger. We're using blockchain, smart contracts, and machine vision as a way to track diamonds through the supply chain to assist in the reduction of fraud and black market activity. Why is this important in the industry today? We've had an onset of synthetic diamonds that have started to pepper the supply chain in certain regions across the world. We've seen double financing of the supply chain as well occur, which has created some nervousness with some of the banks. But more importantly, I guess we're a non-financial use case of the blockchain in a self-regulated market that wants to remain that way. But as we start to stretch beyond diamonds, we begin to look at other asset classes, those that are rising in their own mind. So, for example, diamonds and art, assets that, of course, can be secured by banks and insurance companies. And this, we believe, is to be an interesting segment to be working with. Just to touch on one point that was made, we are not necessarily about know the customer. We're about know the object. And diamonds, of course, is on the anti-money laundering list. And it is the vehicle upon which money is laundered, and it's funding terrorist activities. So when we start to think about where this technology can be applied, it should be applied and could be applied at the object level. Beyond unleashing the value of the underlying asset, as you start to understand provenance, which is the true value of where the items come from, then you can start to understand where these assets are being used or has been obfuscated through the supply chain. And I think that's actually quite an interesting debate or topic to raise.
Okay, thanks, Leanne. Jeremy?
Thanks. I'm Jeremy Allaire, founder and CEO of Circle. We founded the company a little over 3 years ago. We're a consumer internet company, so we provide products for all of you. And the primary service, which launched commercially in the US late last year and has been starting to roll out in the UK and Europe, is what we call a social payment app. Now, if you're here in China, you know about social payment apps extremely well because they're dominant in society. 500 million people use social payment apps for P2P payments. But in the West, in the US and Europe, virtually no one uses social payment apps. It's a very emerging behavior. So we set out to build a consumer finance company where our first product is making it really straightforward for anyone to share value with any other person or group of people instantly and for free. And we wanted to do that in a way that worked globally so that we could share value globally the same way that we can send and receive email instantly globally for free, or we can share our opinions and content instantly globally and for free. And we felt several years ago that a number of technologies were going to make it possible for money to work the way the internet works. We have these open protocols that we use every day. They're embedded in the web and in communications tools that we use, and they're distributed in decentralized technologies, and it's really changed the world. And what we saw 3 years ago was that a number of technologies were going to make that possible for money. The first, and the one that's really the foundation of this conversation, is blockchain technology. But in particular, we were interested in what is now called public blockchains, and I'm sure we'll have a discussion about this today, which is today the only public blockchain that actually works is the Bitcoin blockchain. It's got scale, it's secure, it's global, and it has liquidity, which is really key if you want to move value through it. But this idea that I could have a financial service and I could share value with another financial service anywhere in the world, the same way that if I have an email service and I send an email to someone who has a different email service, it just works. Or if I have a web browser and I want to browse a piece of content, I know I can access a web server somewhere in the world, and the makers of that software didn't have to do a deal together. It's just the nature of open protocols. So we saw that as transformational. But as a business, we're really trying to change fundamentally the kind of core banking relationship that a consumer has. So we're focused on what's often called retail banking. We want to build a global consumer internet bank that services consumers all around the planet. And we want to do that with just radically different efficiencies than traditional financial services. So blockchain's one piece. Machine learning and AI is another big piece that we built on. So all of the risk decisions that go behind payments and issuing credit and things like this, we're able to use AI to make those decisions. Today, about 90% of the decisions are made by AIs in our platform. And then we're a software company at the end of the day. Our entire product is just apps and services on phones. All of our infrastructure runs in the cloud. Literally, we're 100 people with laptops. That's the only property we own. But we have customers now in about 150 countries, and we're going well over $1 billion in transactions now and growing several 100% annualized. So it's an interesting space, and blockchain is core to what we're doing, and excited to talk about it.
Okay, fascinating. So you mentioned Bitcoin, invented, I think, 2008, Satoshi in Japan, first application of a blockchain. But before we go into detail, let's maybe fast forward 5 to 10 years. Some people refer that blockchain is the new of the financial system. How could the world, in your view, let's 5 to 10 years? So how should we think about how a blockchain could change, call it, the world? Maybe you start with you, Leanne.
Look, I think it will be a scaffolding or rails for transaction and commerce, and it might be very disappointing to all of us in 5 and 10 years' time because it's going to be something that we don't necessarily have to touch and see. It just works. It sits there as the rails to transactional trust. So I'm not sure that it is something that we will be sitting here and poking at on a day-to-day basis. It will fundamentally become the open protocols for transactional trust. So.
Okay.
Interesting what Julie?
Well, I get
Leanne.
called many names, but it's a very kind one. But Leanne will do this morning.
Leanne is this morning.
It's much kinder.
So Leanne is saying, because I can relate to one thing, if I can take a minute to tell the story, because it might be interesting for the debate. In the 90s, I had the chance to meet David Packard of Hewlett Packard, and the research person at that time at Hewlett Packard's name was Mr. Birnbaum. Smart man, extremely smart man. And then I asked him the question, well, Mr. Birnbaum, is the computer going to replace television? He says, so many people ask that question. It's a silly question, I'm sorry to say, but I'm going to explain to you why it's a silly question. He says, this is typical of a question of people who look at the object that delivers technology, the hardware. What you should look at is what's inside that box, the content. So we were in 95. So he had already forecast that the important thing was the content. And he said, probably people will still watch TV, they will watch computers, they will watch all different things. What is important is the content. And he said, the mistake we all make, and that's my connection to what you said, is the following. He said, when a new technology comes, everybody is focusing on, oh, this is new technology. Let's now take blockchain. I come to the subject. Sorry, it's a little bit long. Blockchain. We're interested in how does blockchain work? What is the system? Is it going to deliver? And in fact, that's the typical question you ask when a technology is new. When a child is born and the iPad exists, it uses the iPad without asking itself how it works. It's just there, and it wants to enlarge the pictures. It does like this. When it opens the books, it does the same thing, and it doesn't work. But so what I want to say is your question and your answer, and I liked your answer, that it's just going to deliver something. We don't have to worry so much how it's going to deliver it. Although I come back to some worries I have that we have to look into, but basically in 5 years or 10 years from now, this is all going to work splendidly and make our life easier, and probably most people won't understand how it works.
I would like to see it being applied in areas that we've not yet been able to solve. So the last mile, rather than just taking settlements from T2 to T0, apply it to things that, big problems in the world that haven't yet been solved. So the proliferation of counterfeit goods and transparency that's needed across those supply chains is imperative. Financial inclusion is another big piece to the puzzle that I think we should be thinking about where we're applying the technology.
Okay.
Just a few thoughts on 5 to 10 years. I think we're in like the really early stages of this technology, and I think people tend, as has been said, to kind of over-focus on what the technology is today. But I like to ask people, how many people here use, Netscape Navigator to access the internet, right? Or Hotmail, or don't raise your hand.
If you're in China,
but the point is that the software moves incredibly fast, and this technology, blockchain technology, public blockchains like Bitcoin, other public blockchains like Ethereum, they're really very new technologies. And now we're in a place where some of the very best computer scientists are now focused on this problem space. And so what this technology can do in 5 or 10 years is dramatic. Now, specifically, though, I think there's often been a very overly narrow focus on the impact of this on financial services, because I think the impact goes way beyond financial services. There's a thinker, Nick Szabo, who some people think is part of Satoshi Nakamoto, who published a paper a year or two ago where he said, the blockchains are a distributed compute engine for fiduciary trust applications. And so any business function or societal function that involves fiduciaries, you can build a globally distributed piece of software that's tamper-proof and secure and auditable. And that means that you can change an enormous number of parts of society. You can change how finance works. You can change the nature of accounting. You can change insurance. You can change commercial law. You can change governance, how corporate governance works, how public and civic society work through systems of voting. All of these are systems that can be moved to blockchain technologies in the next 5 to 10 years. And platforms like Ethereum, which is sort of in beta, in my view, actually let you do this, actually let you build these kinds of applications today. I wouldn't recommend doing anything production scale on that today, but and again, we're just at the start of that. The last comment here in 5 to 10 years is specifically to finance, because I know that's a focus for a lot of people, is our view is that the business model of charging for payments will disappear entirely in 5 to 10 years. That if you're a bank or you're a financial intermediary and you charge fees for moving value, that will go away. Or if you're a business that charges merchants or businesses to collect fees electronically, that will go away. It will be commoditized in exactly the same way that information sharing and communications are deeply commoditized now for the entire planet. And so we think that's 5 years away at a meaningful scale. And so our assumption from day one is it's impossible to charge for payments. So payments are just a free service on the internet going forward.
Okay, I think these are bold visions for the next 5 to 10 years. I would then open up for discussions, but let's go a little bit backwards. So we are now, what is 2016? So the next, let's look to the next 36 months. So where do you see the most promising applications? We have already mentioned a couple of them, but is there any of them that could make some of the difference? So Leanne maybe, then Jeremy, and then...
Sure. Well, I guess we've seen the onset of 50-odd banks join the R3 consortium, and a lot of their efforts have been focused on the use cases around the blockchain. We've seen the rise of supply chain finance as being one of the best-of-breed applications that most of the banks have agreed upon. And I think the real sweet spot in that is interconnected financial services. And what I mean by that is bringing together the insurance part as well as supply chain finance, and more importantly, around ethical trade, which is a common theme in my life, clearly. But if we're able to bring the certification of goods and truly understand the transparency, and if we pick on diamonds for a moment around did they truly come from a conflict zone, then it should be the incumbent on the banks and the insurance companies to be of full mind around that financial transaction. So I think we're starting to see the ability to bring those interconnected financial services together in the next sort of 18 months.
Great. Any view?
Sure.
Jeremy?
I mean, we're very focused on sort of how can consumers share value with each other and ultimately with businesses across the planet. And so we're interested in seeing in the next 18 to 36 months applications and services that essentially work like WhatsApp or Skype, but for money, and allow you to share value around the world. So I think we're really close to that. As more and more companies, not just Circle, but many companies like us, connect to, right now, the Bitcoin blockchain to make that movement of value work the way that the internet works. So I think that's a near-term opportunity. I think another piece is there's been an interesting phenomenon, which is that traditional financial institutions and oftentimes the governments that regulate them have been very reluctant to have anything to do with public blockchain technology. And that's a natural response because it's something that they don't control. But again, I like to ask, who controls the World Wide Web? No government, no corporation. Who controls internet email or voice over IP? These are just technical specifications and open source and open intellectual property. Anyone can contribute and interact with those. And so it's very uncomfortable for governments and for large financial institutions to have this idea that there's a technology that involves value exchange that they don't control. You still need to regulate the business activity that interacts with it, just like you need to regulate the consumer activity of using drones or artificial intelligence. But fundamentally, this is just now a public good that exists. And so I think over the next 18 to 36 months, financial institutions and governments will move away from just focusing on private controlled technologies and actually embrace these public networks, integrate to those public networks. You'll see major institutional asset managers like UBS begin to trade in assets, new digital assets like Ether and Bitcoin and other things, because they're going to be the engines that power these global networks. So I think that'll be something that we see in the next 18 to 36 months.
Okay. Pierre, you would agree? Next 36 months from your, more from a
well,
country
obviously,
perspective?
Jeremy just mentioned financial institutions and then mentioned government, so I'm going to make a comment from another angle. Obviously, I don't spend my days saying to myself, how can blockchain or this new technology bring more services to consumers? That's not my job. This is your job, and it is your business model, and you do your living with that. And I admire your foresight, both of you, and all those in this field, because your imagination is fantastic. I want to no, I really mean it. What I think we should also worry about, but that's the following: if payments through the world are going to be for free, if value can be transferred for free, as you're predicting and as I think is happening, what does that mean for financial institutions? As a country who is very attractive to financial institutions, obviously I worry what's going to happen to them. Now, in fact, you could also tell me you shouldn't worry, they should worry themselves, but as a country, you have to ask yourself that question. You have to ask yourself another question. If all these things become commodities, meaning they're coming for free, I would like to ask a question here. Commodities or utilities? In fact, many commodities and utilities do not come for free. Like power, for example. Power doesn't come for free. So, in a way, it will become a commodity, but it will not come for free. So, somewhere in the chain, someone will have to pay, or many will have to pay. And third issue, which I think is a fascinating one, and I don't know if we will have time to talk about that, is that here we are setting up a system, not the we meaning the whole world, because it's private initiative. How does that compare with the existence of central banks who are issuing money and along lines that are also maybe not that clear, but it's very close to the sovereignty of every country. Now, in the case of Europe, because we have the euro, we have now the euros that are being emitted by the European Central Bank. It's an additional complexity. So how does that interact with the virtual currencies and, in fact, with these payment services that are going to be done worldwide, it seems, for free?
Okay, interesting question. I would like to open up. Are there any questions, comments from the audience? Yeah, I think we have somewhere. Do we have mics? Or I think you just speak loud. They come with a mic here. Here? Just go ahead.
I think he's got the mic there.
Thank you.
That's good.
It's working.
Yeah, thank you. My name is Margaret J. I'm from the DAO Group. If you look at the operating system, Android and iOS dominate the world, and you have therefore 40% of the advertising revenue goes to Google and Apple. What you are doing is transform that process and to decentralize the system with the distribution ledger. But my question is, and the key is trust, and how do you build that system of trust? And I'll use LinkedIn as an example. I have to read a lot of people's profile in LinkedIn. If you read the way they write themselves up, they all think they're the global CEO of UBS. So I'd like to know whether you have a particular view on how to gain that trust. And also there are various Bitcoin blockchain system. One of the competing is Ethereum, Currencies. So where do you think we can standardize a system to receive general acceptance?
Okay.
Thank you.
Very session question. You go,
Sure.
go first.
I'll take a crack at both of those. So I think on the first, with trust, I think I know this is something Leanne is really excited about, which is I think one of the most exciting applications of blockchain technology is identity and reputation. So for the first time, we can build kind of public identity networks on blockchains that you can trust, and that where users are put in dramatically more control over their own identity information, and where you can have reputational scores that can be used in commerce, in interactions with government agencies, other things. So I actually think it's one of the most interesting areas for blockchain technology itself. So I think that's different than trust in financial intermediaries or trust in a sovereign currency. Those are different issues, I think. On the second, these sort of technologies related to a comment I made earlier, which is, how many of us use Netscape Navigator? Well, what's interesting is the technical standards of the web in 1995, when Netscape was launched, are radically different now. We can run entire software operating systems through browsers, through web technology. It's evolved dramatically, and I think we're in a similar place to where the web standards were. But what that calls for is actual standards bodies. And so I think one of the issues is we have kind of standardization by developers, or developers who control commit access to source code repositories are the standards bodies. And for something as important as blockchain technology, that's probably not going to work for global society. We're going to need the equivalent of the Internet Engineering Task Force, or what happened with the web was you had competing companies building proprietary things in web browsers, and instead Tim Berners-Lee helped with MIT create the World Wide Web Consortium, the W3C, and that's where all the standards for the web evolved and continue to evolve. And so I think we need to see a similar kind of academia with some public sponsorship and industry sponsorship standards bodies around the technology. That doesn't exist yet, and so that's something that needs to emerge in the next few years, in my view.
Yeah, I think it's a very important question on the standards and the whole governance around it when the whole world starts to work with the blockchain. Maybe any thoughts how that could work? I mean, you gave the example of the internet that was also developed highly decentralized, and somehow it just works, and the regulation, the governance somewhat emerged over time. How should we think about that? Maybe from Pierre, and then maybe Leanne, you have also some thoughts about that?
Well, I share Jeremy's view that we will need such a body. For me, it's a kind of natural that it will inspire itself from the internet.
Yep.
By the way, without internet, we wouldn't have blockchain. I think it's even possible that the word blockchain is going to replace the word internet soon. Quite possible. Because internet will be the substructure that nobody is really interested in because, well, obviously it's there, and by the time our children will have children, it's only in science books that you will read the word internet just to know the history of it. But that's just a remark. So I think it could go similarly, but because of the issue I mentioned about virtual currencies, and currencies, traditional currencies, I think at one point in time we have a risk here, which is not a bad risk, just an occurrence that governments might want to have more of a say in this whole procedure. Now, we see that there can be frauds in this system of blockchain, as there can be frauds in any system. But if it goes to the heart of the sovereignty of a country, the money, the currency, you could very well imagine that the central bankers wake up and the governments wake up. So I would add that dimension to what Jeremy has said.
Okay, very interesting. Anything to add? And then
yeah, sure. I mean, I think we're seeing, certainly in our life, in the day-to-day life of Everledger, we're seeing an absolute embrace of industry, and there are existing international standards bodies that are in place. So ISO.org called for standards and a technical paper around blockchain. And I just flew back from Australia, and at the table are the largest insurance companies that are empowered towards being sure that they have a voice at the table around the invocation of these standards. So I think that actually those industries that have recognised that this technology is an accelerator for them. It's something that disruption sometimes is used in a negative connotation, but it is a positive outlook on industry. I think the industry bodies themselves are coming together to form certain industry line standards, which are a different set of advances to what you were talking about in payments. So, which is just as important. So we have GS1 standards in barcoding and in the RFID world of object tracking, and these will naturally evolve into standards around distributed ledgers and how we're going to onset objects.
Okay, thanks. I know there was a question there, and then I come there. Yeah, please go ahead.
Hello, my name is Andres Russo. I am a GGC, CEO of Link America. You talk about standards and trust, and in this fourth industrial revolution, what we're seeing is that countries are being overrun by technology, and as they are being overrun, now you could be in Colombia and taking an Uber and paying in the US, right? And you talk about standards and trust and governance, but the reality is what organization would be in a position, what government or institution or organization will be in a position to really lead that charge, because it takes more than just an idea where we're going in that direction. Is good thinking, but the reality is somebody's going to have to take the global lead, or some organizations or a set of organizations, and if that is, who?
I'm glad you asked that question, so let me answer it for you.
You knew this man before.
No, I've never met him. I'm quite sure he probably doesn't want to talk to me after I give him the answer.
Go ahead.
He'll probably call me another name. So let me talk to the core of the diamond industry, and let's hit a couple of things and nails on the head. So the diamond industry came together and created the Kimberley process. It would be the best Boy Scout promise we've ever seen. 80 countries came together and formed this allegiance to ensure the reduction of blood diamond trade was reduced, and they did a fantastic job. They reduced it by over 20%. But of course, there's still over 1% of the world trade today that is traded in blood diamonds. We, on the top line of the newspapers, we have the president of Zimbabwe screaming out to the industry at large and saying, where's my $2 billion, diamond industry, of my rightful duties and taxes because you have exported out of my country? Where is that? Where are those taxes? We then have Venezuela. The country of Venezuela was struck off the Kimberley process in around 2011, and yet it has one of the richest seams of kimberlite in the world. So these countries have been excluded from even being able to afford the opportunity to have technology. Yet the governments are in a place now where they need the technology just as an enabler to establish their GDP, to be able to give that money back into schools and education. And so when you say the question around who can bring this together, there are certain countries in the world where this is the life and death of their nation. And I speak with that with a very heavy heart. And in fact, I was in Colombia only a number of weeks ago, and we've started to work with the regulator there around one of the largest issues in fraudulent related mobile phones and deaths associated with those being stolen. And why would you say that? Because today we have smartphones in my pocket. I have 3 in my drawer. But yet the average wage for a smartphone in Colombia is 4 months' salary. In Venezuela, it's 13 months. So if I go to buy a diamond ring, I would probably have to save 3 months of my salary. That is the equivalent of a luxury good in these emerging markets. So these governments need to find a solution. These siloed systems and the ability to not have any transparency or any ability to have control over some of the record flows is the biggest problem that we face in these emerging markets.
I want to add to that. I think it's a lot of this is the technology is extremely difficult to regulate and standardize. I mean, it's cryptocurrency and blockchain technology. It's literally mathematics, and it's published specifications around mathematics, cryptography, and the application of cryptographic methods. In the same way that artificial intelligence is it's mathematics, it's predictive analytics, it's statistical analytics. So these are just facts. These are just realities, and the technology that implements that mathematics, I think the best thing for the world is if it's done in the public domain. If it's public specifications, the implementations are open intellectual property, they're open source technology that anyone can audit, improve, etc. The key is, I think, creating open models for that everyone can participate in anywhere in the world, where anyone with an idea that wants to improve it can do that. I think the sort of oversight or regulation of the use of that technology is a different matter. That's a question of, are you applying artificial intelligence to make decisions in a boardroom, which was one of the topics here at the conference. Well, maybe corporate governance doesn't allow for that yet, which is the case. But the activity versus the technology itself, I think the most important technologies in the world are open source and open intellectual property that everyone can benefit from. And the last comment is, I think, and it speaks to the central bank question and other things, we now are living in a world where we have non-sovereign money, and it's global, and it has got a lot of inherent advantages over sovereign money, and that's just going to continue to grow. And so, in some ways, 20 years ago, most parts of the world, government monopolies ran the communications infrastructure. They ran the telephone service. They ran the quote-unquote public utilities. But today, we have free communication services that work over the open internet, and those government monopolies aren't involved in that anymore. And so it may be that government monopolies around money change over the next 20 years as we adopt non-state, non-sovereign currencies. And we'll have to adapt to that. Obviously, you want to still do things like prevent crime, prevent money laundering, prevent terrorist financing. You want to make sure that you have consumer protections, that you don't have financial institutions that over-leverage, et cetera. But I think institutionally, the governance models around this are just going to have to change.
Okay, I would like to come back to that question of government money. But there a question, I think here one, and then we continue the dialogue around it. Yeah, please go ahead.
Hi, I'm Manoj with Frost & Sullivan. We talked about blockchain being an open protocol for trust, and in many ways companies like Uber, Airbnb are about trust between the driver and the rider, or between the guy who rents the house and the guy. So in a way, is a blockchain now a great mechanism to start competing with these companies? The barriers to compete with these companies, have they lowered because of blockchain now?
Sure.
I'm glad you said that. You said it first. I was sitting next to Travis yesterday.
Maybe there is a company called Arcade City.
Yeah.
And what do you think about them and the potential? Is that real, or is it?
So this is this idea that using blockchain technology, where you have no intermediary for payments, you have got the ability to attach things like reputation to transactions. and you have the ability to use things like smart contracts that can actually make the business logic decisions, that you could publish a service on the internet that allowed you to do Uber without Uber. And that's what you're talking about, that particular example. So yes, sharing economy use cases, people will create public domain versions of those. The Craigslist example versus eBay, right? Or Wikipedia versus the encyclopedia, right? So you'll see public domain versions of sharing economy applications built on blockchain technology, and the first alpha, beta type examples are being tested right now.
Okay.
Thank you. Good morning. My name is Alexei Blagev at Creative Financial Corporation, Russia. I have a question about value transition and the QIC. Like you mentioned about the QIC procedures, and this is I would say the new technology that reveal potential for this, right? So my question is, if I am a person in Russia and I'm the same person in Europe, will you or maybe you do any steps about the digital identity to use the same ID without the different countries? And how this ID will be tracked about the value transition from the one place to another place? And in the end, why you think it will be free of charge? Because everyone within distributed ledger pay for the consensus.
Okay, I think we come to some really relevant questions. When you can have transactions, it's somewhat free floating, trust, we said several times. Questions a bit about the prerequisite that all can happening, because it doesn't happen today or only in a limited case. So maybe you could talk a little bit about, their private blockchain. I can have a blockchain within the company to be more efficient. We have developed, for example, a pilot where we could put our marketing program on, so we can have as a captive audience with our customers some transactions throughout the overall blockchain. And then what we talk about also very much here is the use case about the public blockchain, where the question is digital identity, security is a question, trust, that trust can happen. You mentioned, KYC, anti-money laundering. We talk about, was it not worthwhile at a certain point? You have all those private currencies that you can somewhat link it back to central bank money, to real money. Maybe you can have some, let's try to structure a little bit that sort, and you from more from a country and from a governance perspective. So the how to link back to central money, the question of identity in the blockchain.
Well, obviously, all the things you just mentioned are connected, but the subject is extremely wide. To stick maybe to know your customer, first of all, here, even today, we see how complicated it is to implement know your customer rules in financial services today. Let's look at the situation today. It burdens companies, banks specifically, quite a lot to do so. So it's slowing down transactions. At the same time, it's increasing the security. Now, obviously, if with the blockchain we would have a system that does it faster and better, well, this is good news. But behind this blockchain, I mentioned this in my introductory remark, there are identities. So obviously all this has to be digitalized and will trigger international cooperation. And maybe what's going to trigger that international cooperation even more so is taxation. In fact, when this gentleman asked the question, and after you had spoken, I really wanted to say a word on taxation. I say it now. The subject might come back later. We have had a G20 initiative which was finalized after 3 years, so extremely fast, to recreate a new landscape for international taxation. Because the taxation obviously is a worldwide issue, and you have to determine where you pay which amount of taxes. So we have non-double taxation agreements, a whole grid all over the world. That was 100 years old. So with the initiative of BEPS, base erosion profit shifting of the G20 and the OECD, it was decided in November how this new framework should look like. 15 types of subjects and with hundreds of recommendations. Now, the EU is a little bit an early adopter of some of these rules, showing the way and pleading for a level playing field that others should follow suit. And one thing which wasn't done, and this is really our subject here, is that we would elaborate special rules for the digital economy. Mm-hmm. Now, there were two schools. There was a school that said, well, we can modernize the taxation system worldwide on the one hand, but we need special rules for the digital economy. And others said, no, digital economy is like the rest of the economy. We should not do special rules. So it's basically, that was what was then done. And I asked the question in all these examples with Uber and others and Airbnb, in the end, where is the tax going to occur? Who is going to pay tax? And then the question is, in fact, you have to find out where is the added value. And that's the key point. Now, where is the added value in the whole chain? I'm not talking about blockchain now, just the chain of value. And one risk that we see is that, you mentioned two companies that have a big chunk of the cake. We have a risk worldwide that there's going to be a couple of companies. I even saw a book that is called The One World Company, that the biggest guy is going to win, and that's the one that's going to accumulate the money. So these are questions that are extremely complex. It starts with know your customer, but it ends up where is the added value. And I think if Jeremy and Leanne have ideas on that, it's extremely helpful, because we need the input of the players of how to do that, unless they just tell me we don't want to pay any taxes, which I understand too.
Can we stay a little bit on this question? You mentioned also crypto money versus fiat money, so central bank money. Is there any relationship? So should you have on the blockchain a settlement coin, for example, that is linking back crypto money to central bank money? Or what is your vision? And maybe, Leanne, also from your practical point of view, how that is working?
So, I mean, that's how Circle works today, which is we sit at the intersection of fiat money and digital currency. Our view is that the vast majority of consumers, perhaps other than people in Venezuela or Argentina, want their government money because that's how they're paid their salary. They understand purchasing power in it. It's how goods and services are priced. So it's quite important. Unless you want to be an investor in currencies, most people don't really care to do that. So what we wanted to do is create a way where central bank money can travel over the blockchain, but do that transparently or sort of invisibly to the consumer. So they get the use of public blockchains as a kind of open settlement layer that interconnects any money around the world. So that's actually how Circle's built today. I think the more interesting is the benefits of cryptocurrency for government-issued money are very significant. And we've spent considerable time with several central banks. It's well known publicly that the Bank of England is actively looking at this. The PBOC is actively looking at this. Digital currencies are going to be far superior to the existing forms of electronic money we have today. So central bank issued cryptocurrency is in our future. The benefits are, the ability to have more direct control over the money supply, to have dramatically more visibility and accountability over the health of the economy, over the leverage that exists within the financial system. And the Bank of England actually thinks they can offer the ability for consumers to have deposits directly with the central bank. And so I think all those things will happen. How quickly, we'll see. We're in the kind of proof of concept and research stage of that. But even in that case, if we have the SDR currencies, all cryptocurrencies, there still is going to be the need for public blockchains, not just for financial transactions, but for a huge range of secure record-keeping purposes. And so there'll be an interaction through that kind of open global settlement layer.
Okay. Anything to add from your practical? Good. Can I maybe some more question from the audience? I think there was over there a hand, and then go ahead.
I think last week there was the DAO hack, and there was lots of questions around smart contracts, and who is legally kind of responsible for that? Is it the coder? Is it lawyers? I'd like your thoughts on that, actually.
Sure. Yeah. I'll give a thought. The DAO is a great experiment, ongoing experiment. But what it suggests is, you have to write code that is good, that doesn't have exploits in it. And so, especially when you're dealing with fiduciary trust, that becomes even more important than, say, the code that generates a web page or something like that. So the stakes are higher when you're dealing with code that is essentially encapsulating fiduciary trust. And I think there are a lot of young people who were excited about that project and got it going, and probably and didn't realize when they did it that it would raise $150 million. And so it got ahead of itself. So we're like I said, we're in the beta phase of smart contract technology, and that's a great example of that being the case. But it does raise, for me at least, more interesting questions, which are, there was no terms and conditions or legal document for that organization. It was literally the contract was the code. And so I think what'll be interesting in the next year or two is, when does a court make a judgment that says the contract is the code, and we then are in this world where law and code are intermingled. And I think we're very close to that happening, where commercial law is encapsulated in code, and the first courts that make those decisions are going to have profound implications on how this gets used.
Okay. Yeah. Go ahead.
From a government perspective, the digitization helps collect more taxes and also trace the money, so that they can avoid corruption and terrorism, etc. But on the other hand, creation of a maybe unified global currency, etc., threatens their existing control over their individual economies. So from your contacts with the local governments, where do you see the legislators stand? Whether they are pro blockchain type of technologies, or whether currently they are resisting?
Maybe Leanne, from your practical experience,
our work has been in robust certification. I mean, there's a series of fraudulent instances around document tampering that link directly back into diamonds at a rough and a polished stage, and that of course then underpins the value of that asset. We're not in a conversation stream about currency, so we're an object level, a non-financial use case. But definitely the ability to bolt on provenance and transparency around that object, so that they can pass funds or attribute the correct taxes, is really where the conversation topic where we come into play. So you might be better off.
Yeah, on the central bank piece, I'm sure you have some comments as well. I think regulators, and your example from Luxembourg, I think is a great one, of embracing companies but making sure that they follow the rules, right? My view, and we deal with regulators all around the world now, is they're very interested in fintech, and they see very clearly that we're moving into a world where finance and money is really just software, and that the companies that are going to innovate are going to be software companies, and banks that transform themselves into software companies as well. It's not either or. But fundamentally, we're moving into that world, and they're very open to it, trying to understand it, in many cases passing new rules to embrace it. And you're seeing this happen all around the world. In the US, you're seeing it certainly in the UK, Luxembourg, Japan, China, other markets. And so I think there's a great deal of openness just at a conceptual level to the idea that this can happen, and it can happen in a meaningful scale. I think the separate question, which is sort of how do you manage the economy in a world of non-state currency? It's a longer topic, probably.
Okay.
Yeah, if you want, I can say a few words also on this. You rightly make the connection with how do I run my country and run the economy of my country. I give you an example that's now was a kind of forerunner of this. The EU legislation, which was passed somewhere at the end of the 90s, said that or beginning of 2000, that for e-commerce in the European single market, you could choose to have a hub somewhere, and then sell all your goods in the single market through that hub. Now what happened, and this is a fact, Luxembourg having the lowest VAT rate, all the companies settled in Luxembourg and sold their goods all over Europe through Luxembourg. And we collected all the VAT on this. After a couple of years, everybody woke up and said, yes, this is the general principle that we have in taxation and in the European single market. That's what the single market is all about, is you can choose whatever place as your central place and reach out from there. And there the country said, no, but that doesn't work for e-commerce. There we have to have an exception to the rule. So they decided, and it entered into force in 2 years ago, 2015, that you can be placed in Luxembourg or anywhere else. You have to apply the VAT of the country of consumption and the rate of the country of consumption. So as we have all the players in Luxembourg, it was a real mess because they had to reorganize themselves and anyway. And many decided to do still some things in our country. Others decided then to move because it didn't make sense, it was too complicated. And in fact, what we've done in this concrete example here, we are diminishing the value of the single market. Now, the EU single market is one example. We can take the whole world for this matter. So you could say for e-commerce, and I come to taxes and I come to how you run your country, you could say, well, if I don't do it the way the EU has done it, that you have to pay your VAT also for e-commerce in the country of consumption. If you don't do that, the VAT is going to be collected somewhere in a central manner. So I think it's another example that shows that we have to reflect how we organize taxation in such a way that you have a fair distribution. And if we don't do that, well, we're going to have extremely complicated situations because some countries that are more in fintech than others are going to attract all the revenue.
Okay, very good. I would allow for one small last question before you wrap up.
Good morning. I work in a bank in an emerging market, Brazil, and we are doing some tests running under the public blockchain. But my question, Jeremy, is that I like your idea of sharing value, but in our emerging markets, currency suddenly changes because a lot of arbitrage and a lot of speculation. So consumers, as you said, they don't understand. So what we are doing, we are hedging the transaction, and it's expensive. So during the transition that I think will take a long time in order for the physical money, as you said, the central banks to realize that we can do this transition, the consumers in the following year, 2 years from now, they won't understand and who is going to pay this cost of hedging. Sure. So for example, Bitcoin was $200, now it's $600, and Brazil currency depreciated, so I like your idea, but we have to take care of the transition phase, otherwise we are going to lose the potential of blockchain.
I'll give a quick answer, which is sort of how we operate. So people use their native currency on Circle, for example. So it would be the real if it was in Brazil. We're not in Brazil, but it's dollars, it's euro, it's sterling, etc. If they want to transact over the blockchain, it's essentially just used as a settlement layer at the time of the transaction. We take on some of the currency risk for managing the liquidity that's needed to actually make that work. So we have a treasury and trading operation that trades ahead of customer demand, manages liquidity pools and all the currencies that we operate, and we do it quite profitably. And in fact, if you're a trader, volatility is your friend if you're smart in the market. But we actually monetize transactions over the blockchain through that trading operation, where the customer though is literally they're not paying a fee. They're literally getting the exact market rate at the time of the transaction. And so you have to, just like Citibank is managing a treasury across the 50 different currencies that flow across their platform. They're doing that smartly and they're monetizing that. 50% of Visa's profits are from foreign exchange, and a great deal of that is from their own foreign exchange hedging strategies. So there are ways to monetize it and still provide the value proposition to the consumer.
Okay, the issue is that somebody's paying this
yeah,
bill, right?
I think we are coming somewhat to an end of the 1 hour. They're already raising their hand. We started out with a vision, it's a bold vision. I think we all feel somewhat the power that blockchain could have. The interesting part is we have already various use cases in place. There are small startups, fintech, established players. Government needs to think about it. There are also hundreds of still open questions about the legal framework, security, know your customer, digital identity. So maybe in closing, key takeaways from all of the panelists.
Shall I start?
The 30-second elevator key takeaway.
What I take away is one of Jeremy's statements, which I really liked and which is very compelling. He says, for sharing value and sharing assets and doing payments, all this is going to become a commodity and will be for free. Obviously, this is a dramatic sentence because it will change the world in which we live. So. And for the rest, I appreciated the questions, and I think we had a good interaction. But I think this sentence deserves a whole book.
Okay, Leanne?
I think the technology is definitely here to stay. It's not just a pipe dream or a thought or a white paper, and that we are seeing true industry uptake of the technology in certain streams. Insurance might be a little slow, but we certainly see that as also a very large part of the market that could be potentially accelerated.
Okay, Jeremy?
Yeah, I think it's very exciting. When we started this and I looked at the technology, to me it was as big or bigger than the web, and I was involved in the early stages of commercialization on the web to see that. And so, but similarly, we're at that level. We're in the 1996 of blockchain technology, of digital currency technology, so to speak. And the arc over the next 20 years will surprise all of us. I think it will take a lot longer than a lot of people who are evangelists would say, but in the end, the actual impact will far exceed what any of us can anticipate today.
Okay. Unblocking the blockchain. I think a truly fascinating topic. That was certainly not the first, certainly not the last discussion. It's a topic that is about the innovation, about established players, about new markets. It's about also the collaboration between your private sector and public offices. So it's a journey, and I think we should be all part of it. So thank you very much, and give a warm round of applause to our panelists. Thank you.